All right, let's jump right in. We are talking about one of the most, if not the most, critical topics in trading, discipline. But I want you to forget everything you've heard about willpower or motivation. Seriously, we're going to talk about building a system instead.
How many times have you said this to yourself? My analysis was right, but I still lost money. It's maddening, right? You do all the homework, you totally nailed the analysis. The chart does exactly what you predicted, and somehow you still end up red on the day. If you've ever felt that kind of frustration, well, you are definitely in the right place. See, most traders don't actually fail because their strategy is bad. They fail because they break their own rules the second the pressure gets real.
So let's just redefine what discipline even means. It's not about being some tough guy or having a magical level of self-control. It's actually way simpler and, frankly, way more powerful than that. True discipline is just a repeatable process. A process that forces you to act like a professional, especially when your emotions are absolutely screaming at you to do the exact opposite.
And this is probably the most crucial point of all. In trading, you have absolutely zero control over whether any single trade is a winner or a loser. Zero. That's totally out of your hands. But what you can control, what you have 100% control over, is your process, the setups you decide to take, how much you risk, where you put that stop loss, and how you review your performance. You got to understand, the market rewards consistency in your process, not how intensely you feel in the moment.
Okay, so if it's just about following a process, why is it so ridiculously hard to do? Well, here's the good news. The problem isn't you. It's the fact that there's a fundamental mismatch between the way your brain is wired and the way the market actually operates. Just look at this comparison. It really lays out the fundamental conflict. Your brain, for millions of years, has been wired to seek certainty and avoid danger. It's a survival machine. But the market? It's an environment of pure probability. It couldn't care less about your feelings, it dishes out losses as just a normal part of business, and it has absolutely no idea you even exist. This mismatch is the breeding ground for pretty much every bad trading decision you'll ever make.
Okay, let's get into the nitty-gritty. Bias number 1, loss aversion. There's this Nobel Prize-winning idea called prospect theory, and what it found is that the pain of a loss feels way more intense than the pleasure of an equal game. So when you're in a losing trade, your brain's ancient threat detection system just lights up like a Christmas tree. And what happens? You do completely irrational things to avoid that pain. You move your stop, you start averaging down, you try to revenge trade to win it back immediately. It's like you're grabbing the steering wheel during a skid, and it's the absolute worst thing you could do. And here's the crazy part. Success can be just as dangerous as failure. You hit a few winning trades in a row, and suddenly you feel like you've got the Midas touch, right? You feel invincible. Well, that overconfidence leads you to break your rules in a totally different way. You start taking trades that aren't really your A+ setup, you get reckless with your position size, and you just trade way too often. I mean, there's a famous study that shows the more individual investors trade, the worse their performance gets. Overconfidence is a one-way ticket to giving back every single penny of those hard-earned gains.
So here's the big takeaway from all this. You cannot motivate your way out of literally thousands of years of human evolution. Trying harder is not the answer. The real answer is to engineer a system with rules that are specifically designed to short-circuit your brain's flawed ancient wiring. You have to see this as an engineering problem, not a willpower problem.
All right, so how do we actually build this thing? Well, we call it the discipline stack. Think of it like a 4-part framework that's designed to do one thing: make the right action the easiest action to take.
So here's how the stack builds, layer by layer. We start with the foundation, which is your trading plan. Think of this as your personal constitution. Then we add some guardrails. We call them risk rails to stop you from driving off a cliff. After that, we put a gatekeeper in place, a pre-trade checklist to keep you objective. And finally, we close the loop with a data-driven review loop to make sure we're always getting better. See? Each part builds on the last to create this really robust, complete system.
First up, component 1, the written plan. And I have to emphasize the word written. If your plan is just floating around in your head, it's not a plan. It's an emotion, and it will change on you. It has to be a concrete physical document that clearly defines everything. What is your A+ setup? Where is your stop? How much are you risking? Like I said, this is your constitution. Okay, next we install the risk rails. Think of these as your non-negotiable circuit breakers. They're the rules that save you from yourself. For instance, having a max daily loss limit. Let's say you lose 3 times your standard risk unit, or 3R. That rule isn't about admitting defeat,
It's a professional tool to prevent one bad day from spiraling into a blown account. It just stops the emotional bleeding before it gets out of control.
And now, for the gatekeeper, the pre-trade checklist. This is brilliant because it turns discipline from this vague, fuzzy feeling into a simple yes or no decision. Before every single trade, no exceptions, you run through this list. Is this my A+ setup? Yes or no? Is the stop logical? Yes or no? If you get even one no, the decision is made for you. You don't take the trade. End of story. It takes maybe 10 seconds, and it can save you hours and hours of regret.
And the final piece of the stack is the review loop. Now, I want you to start thinking about your journal differently. It's not a diary to write about your feelings. It's a source of cold, hard performance data. You become the analyst of your own trading. By tracking your adherence to the system, you can spot your weaknesses and then systematically fix them.
Okay, that all sounds great in theory, right? But let's get real. Let's see how this discipline stack actually saves you from yourself in 3 super common and super dangerous real-world scenarios.
All right, scenario number 1. You just got stopped out. The trade looked absolutely perfect, and now you're just angry. You feel that powerful primal urge to jump right back into the market, probably with bigger size, to win that money back.
This is where your system kicks in and takes over. The problem, as we know, is that emotional spiral. But your predefined rule, written in your plan, says something like, after 2 losses in a row, I take a 20-minute break, no exceptions, and my next trade is half size. Now that rule isn't a suggestion, it's a command. It physically forces you away from the keyboard, which breaks that emotional feedback loop and protects your capital from your own anger.
Okay, scenario number 2. We've all been here. You're in a trade, and it starts moving against you. Then that little voice in your head starts whispering, hey, if you just buy a little more down here, your average price will be amazing. When this thing turns around, you're going to make a fortune.
Listen to me. This is probably the single most fatal mistake in all of trading, but your system's rule is crystal clear. I do not add to losing positions, ever. You know, the legendary trader Paul Tudor Jones said it best, losers average losers. Your rule forces you to just accept that your initial idea was wrong and to cut that loss while it's still small. It preserves your capital so you can live to trade another day.
And finally, scenario 3. The market is dead quiet. Chop, chop, chop. Nothing is happening. You're just sitting there, staring at the charts, and you get that itch. You feel the need to do something. So you start seeing patterns that aren't really there, and you convince yourself to take a pretty mediocre trade. Here's a key lesson. Boredom is not a trading signal. Your system protects you from this with a simple rule like maximum of 3 trades per day or only 1 trade per session. This forces you to be selective. It makes you sit on your hands and wait for your true A+ setup. This preserves your financial capital, sure, but just as important, it preserves your mental capital for when a real opportunity actually shows up. It's how you prevent that death by 1,000 cuts.
So, the big question is, how do you actually put all this into practice? Look, don't try to just become a disciplined person overnight. That doesn't work. Instead, let's install discipline, like software, with this simple 14-day action plan.
Okay, here's the plan. Days 1 and 2, your only job is to build your rules. Just write down your top 2 setups and your 3 core risk rules. That's it. Then, from day 3 to 7, you track your adherence. And here's the key. Your only goal is to follow your rules. Forget about P&L. Your new measure of success is, did I follow my rules more than 90% of the time? Finally, in that second week, you do a weekly audit. Look at your journal, identify what triggers you to break the rules, and then adjust your environment to make that mistake harder to repeat.
So I'm going to leave you with this one final thought. Discipline is not some personality trait you're either born with or you're not. It is a system you design that you build. It's the architecture that protects you from your own worst instincts. So my question to you is, what are the first 3 non-negotiable rules you're going to build into your system starting today? Because that's where it all begins.